Some companies are easy to love. They have great products, strong brands, massive revenue, a large cap, bullish analysts, loyal investors, and yet their stocks still feel heavy. And that's the strange psychological story now surrounding both Netflix and Palantir, NFLX and PLTR. Because despite all the excitement around AI and streaming, and data and advertising and future growth, both stocks have recently struggled to generate the kind of emotional momentum that investors expect. And honestly, that disconnect is fascinating because many investors assume, I know I do, a good company equals good stock. Good company equals sign good stock. But Wall Street doesn't work that way. I am slowly but surely learning. Markets trade expectations, and expectations can become really dangerous. Take Netflix, for example. Netflix has massive global reach, growing ad revenue, huge free cash flow, and one of the strongest entertainment brands on earth. And yet the stock itself feels strangely heavy. I remember buying it and sitting on it, and it didn't do anything, right? So why is this? Because the market may already expect Netflix to be great, and that changes everything. The same thing may be happening with Palantir, another stock that I purchased, and it just sat there. It wouldn't move above 135, 140. It just wouldn't. Even when the war hit, Iran, nothing. And you would think defense stocks, oil too. You'd think it would just take off to the moon, but nothing. Palantir is also psychologically fascinating because, how many companies trigger investor imagination like Palantir? AI, defense, intelligence, government contracts, space, big data, the future, all these things, all the variables, all the factors are baked into Palantir. And it's like not even a blip on the radar screen. So I was researching Netflix and reading about it. And I'm like, this sounds just like Palantir. I got to do a piece on that. Netflix and Palantir, great companies. So why are the stocks of these so-called great companies, and they are, but why are their stocks in the doghouse? Because it's frustrating. You invest money and you're like, okay, I've planted the seeds. I've done my part. A little sunshine, a little water on those seeds, a little time, and nothing. It's not growing. You know what I mean? So it gets a little frustrating. And I know we've all been there. So Palantir feels almost like a science fiction stock, and it's amazing. It's like Rocketeer. It's like future. And despite all this excitement, its stock has struggled. And it's been many weeks now, And I think the reason boils down, it's fairly simplistic, is the reason, and it's expectation. Expectations on both stocks have become enormous. At one point, Palantir was trading, it had a trailing PE ratio of around 152. And that's not just optimism, that's investors pricing in what they see is a gigantic future. And once a stock becomes emotionally crowded with future hope, even good news can stop being enough, and that's the key psychological idea here. Because now investors, they're not asking, is Palantir growing? They already know it's growing, but it's like, can it grow fast enough to justify the dream? And that's a completely different question. As an investor, my answer is no. I didn't. Maybe it's going to take off now, but I haven't seen it. I haven't seen it do what it's kind of supposed to be doing. And then this is where NVIDIA enters the conversation, because NVIDIA still feels emotionally powerful to Wall Street. And the market keeps rewarding NVIDIA because investors still believe the story of NVIDIA is accelerating. It's going, it's off to the races. That's important. Acceleration matters more than so-called greatness. The market rewards momentum, emotional excitement, narrative intensity. How intense is the story behind the stock? Future imagination. The market rewards all these things, not just, quote, good companies, end quote. And that's why two companies like Palantir and Netflix can both look incredible on paper. They're big, they're mega cap, and then one stock explodes higher, NVIDIA, and another feels stuck in the mud, Palantir and Netflix. And honestly, this happens constantly in markets. A company, how many times does this happen? Palantir just beat earnings too, 10 days ago or whenever it was. A company can beat earnings, grow revenue, dominate its industry, attract bullish analysts, great write-ups, and while the stock the stock will still quietly struggle because expectations have already gone too far ahead of reality. And that may be exactly what we're seeing now with Netflix and Palantir. And there's another layer to this story too, and that's insider selling. And I didn't know any of that until I started digging on that. Both companies recently showed insider sales activity while analysts and media outlets keep discussing bullish future scenarios. So analysts and media are saying, hey, this is a great stock. And yet, there's insider sales happening among the people who run the actual companies. And what does this do to an investor like me and you? It creates confusion. It's like, well, who am I supposed to believe? The people who are, I think they're hyping it up because they don't work they don't work there. They're not employees, and they're hyping it up. And they're, I'm getting kind of pumped up listening to them. And yet I research and I see, there's like more than usual insider activity happening with this stock. What do they know that I don't? And then the story becomes psychological instead of financial because fear kicks in, doubt enters. I'm not going to invest in a stock that I'm afraid will or is going to drop. I'm not. Why would I? And then the overall narrative weakens. And once a stock loses emotional momentum, it can feel heavy for a long time. And Palantir and Netflix both of them have felt heavy for a long time. Is this going to change tomorrow morning? I don't know. Maybe it will. Maybe we're on the very end of everything that I'm trying to describe here. But both stocks have felt heavy for a long time, and I'm glad I haven't been sitting around waiting for either one of them to take off, because they haven't, you know. And they can feel heavy even if the underlying business remains excellent, superb, first in its class. And I mean, yeah, look at both of them. Who can hold a candle to Palantir? Who comes close to Palantir? Nobody. How about Netflix? Nobody. They each do. They're each the best in their specific field. They are the best. They are the preeminent stock in their industry. So the lesson for me is that a great company does not automatically mean a great stock. That's a horse tablet. That's a big old horse tablet to try to swallow, because we assume that it does. Well, a great company is a great stock. You know, Walmart is a great stock. Great company, great stock. You know, but it's just not true. NVIDIA, great company, great stock. But you know, it's not true for every single company out there. I think sometimes the better the company sounds, the more dangerous expectations can become. And that may be one of the biggest lessons that us modern investors still struggle to understand. I'm Jack Carter. Check out Jack Carter Books, the website. There might be something there that'll pique your interest. And I shall see you good people next time.